Hi everyone, today let's talk about Alphabet earnings. Then we'll take a look at all the usual data and charts, as well as my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Alphabet reported earnings today along with some other major players, but Alphabet is following the most on their earnings announcement, and they are down quite a bit. You can see over 5% after hours. They were up 56% over the past year, so it's been quite a run. We've been talking about it for a while, but they did not report the kind of ad revenue people were hoping to see, and you can see it here. Earnings beat, revenue beat, cloud beat, YouTube right on the money, and then looking at traffic, down a little bit on traffic acquisition costs, so that is a beat as well, costs coming in under expectations. And all of that does seem good up until this point, until they start to talk about some of the weakness in the ad market, which is where Google still makes most of their money. In terms of cloud growth, the expansion is quite good, 26%. They are continuing to compete with Amazon and Microsoft in that space. In terms of quarterly revenue, year-over-year change, not bad, 13% in comparison with 11% the previous quarter. And this seems to be on a growth cycle here. It had been declining pretty consistently from 2021 up until fourth quarter of 22. Now we're back into a bit of a growth cycle. But like I said, the key indicator here is ad revenue, $65.5 billion. In comparison to $65.94 billion, so they missed by about $500 million, and their forward guide for ad was also a little bit weaker. Moving over to fear and greed, we ended up finishing right at that 74 mark, so just into that greed section. I wanted to highlight the chart. You can see we're starting to get a little bit of a step down. We were at 76 or 77, and then we stepped back towards 74. Momentum continues to be in extreme greed. Strength and breadth continue to hover in regular greed. And now the overall indicator is back into greed. You also have the put-call ratio in extreme greed. Volatility says it tapered here a little bit. I would expect that to go higher with the earnings that we saw. And then safe haven demand, still extreme greed. Junk bond demand still hovering in greed. Moving over to seasonality, last trading day of the month is tomorrow. Expected to be slightly bullish from the lows from today. I don't really see that happening. We'll take a look at the charts. Markets are definitely falling a little bit on those earnings announcements. It was not great across the board just about, and we'll see what that looks like, but seasonality says a little bit of bullishness, and markets are supposed to be able to maintain that momentum into the first part of February. You can see rallies here up until trading days 8 and 9, and then you see a little bit of sideways chop, and then a bit of a continuation into the rest of the month. We'll see how that plays out with the FOMC and all of the things that are coming tomorrow. And then over the next week, we still have a lot of big earnings coming in. And then looking at that February calendar, I do want to highlight, you can see 20 through 23 February are expected to be a pretty bearish period in markets. So we'll see how that plays out along with those probabilities we just mentioned. Moving over to the earnings calendar, you can see Microsoft at the top. They all beat. Google beat, AMD beat, UPS missed a little bit on revenue, Starbucks missed on both, but overall good. Just seems like the forward guide is weak. And we'll take a look at it on the charts. Markets are moving lower on these guidance. And I do think this is the catalyst that's going to send markets lower, this alongside of the FOMC. And then tomorrow, don't forget, we still have MasterCard, Qualcomm, Boeing, and MasterCard is pre-market tomorrow. So we'll see how that one comes out. And then on Thursday, we still have Apple, Amazon, Meta, Honeywell, so lots of big companies there. The heavy hitters are after hours. Honeywell comes out pre-market, so still lots of data to come out this week. Moving over to the economic calendar, you can see consumer confidence came in slightly lower than expectations. Previous read also revised down, so that's a little bit weak. But looking at jobs data, lots of openings, over 9 million, much higher than expectations. So that continues to be good for the economy. And then looking at tomorrow, don't forget we have ADP non-farm employment change, as well as the FOMC statement here at 1400. As well as the press conference. That's going to be very interesting. I still think they're going to be pretty positive on inflation. We continue to see good data coming in on PCE as well as CPI. So in terms of hawkishness, I don't expect them to be more hawkish. I think they're going to stick to their statement, which is still more hawkish than what the markets are pricing in. We talked about that in yesterday's video. There's just too many cuts priced in, and I think they're coming too soon. And then don't forget, On Thursday, we do have the unemployment data. So you have Eurozone unemployment rate for the US. You also have US global non-manufacturing, US global manufacturing, as well as ISM manufacturing PMI and manufacturing prices, as well as Fed balance sheet. And then you have all of your jobs data this Friday. So lots and lots of data to keep an eye on. Moving over to max pain for the end of the week, 1.1 million options, put call ratio 2.5, put wall 480, probably getting a little bit close to that. Max pain down at 482, call wall 495, top of the puts up around 491, 492. I think we've probably topped out at this point with earnings coming in pretty weak. And the FOMC tomorrow is going to bring some volatility. We'll definitely see how that plays out. But right now, 480 is kind of that initial put wall. Moving over to the charts, you can see we basically went sideways and then sold off after hours with that big earnings news. So we got up into that 491 area, pulled all the way back to 488.94. We're right at my level, 488.68, right at the top of these previous peaks. So we fell a little bit on the earnings news. Definitely interesting. We're still holding the level, so everything is still bullish. I just think we're probably going to see more downside based on the FOMC tomorrow. They're not going to be as dovish as markets want to see, in my opinion. And this has been a colossal run. We've been talking about it for a while. Looking at it on the daily chart, you can see we bottomed here on 27 October. And since then, on the S&Ps, we are up almost 20%. So big run on the markets, and I think we're just extended at this point, and there's not enough good news or catalysts out there to continue to maintain these prices. Moving over to the NASDAQ, even weaker than the S&Ps, obviously more affected by Microsoft and Google, as well as AMD. Pretty much fell throughout the session, kind of expected that. The rally yesterday I didn't really expect. Today, I expected more downside, and sure enough, that is what we got. Talked about it yesterday, and over the weekend, I expected more bearishness in markets. That one step up we got yesterday was a bit of an anomaly, so we got another step down in price action and momentum. RSI right on the SMA. You can see we're a little bit oversold on the hourly chart. That doesn't mean much. You can see a slight pullback and then a bigger dip low, especially based on FOMC. Right now on the hourly chart, the only dynamic support you have is down at 418.50. Certainly possible we get there, find a little bit of a bounce. Next level for support for me is down at 416.66, which is going back to the lows here from Monday and Tuesday on the 22nd and 23rd. Still got the 9 EMA sitting at 423.22, but after hours we are below that on the daily chart, so you can't see it because it only shows the closing price, but we are below it after hours. We're also below my trend here, which was sitting at 423.88, so we're below trend, below the 9 EMA. And then your next supports are down here at the 21 on the daily, which is 412.72. So quite a bit of downside potential here on the NASDAQ. Makes sense. Like I said, same thing here on the NASDAQ. The run has been massive. Expectations are super high coming into this earnings. I just don't think that we can do it. Moving over to the Russell and the Dow. Russell fell on the day, took out my level 198.75, held the 9 and VWAP, bounced a little bit from that level. So we're kind of back into this consolidation range. Couldn't continue up to trend resistance or my next level. So still holding in this zone. If it starts to break below 195.15, that could be concerning. But right now we're still holding. And then looking at the Dow does not care about anything. It just continues to go higher every single day. Absolutely massive on the Dow. Let's look at it on the daily chart. Another 0.3 to the upside, and it's up even more after hours. The Dow has just been on a massive run, and it continues here today. Moving over to Apple and Tesla. Apple continues to fall. We talked about it looking weak over the past few days, and it looked even weaker here today. So broke that level at 190, moved all the way down to 187.75. So that does not help out the NASDAQ, which is currently contending with those weaker earnings. Momentum continues to be bearish. RSI almost oversold. Like I said, 186.81 could be interesting. Next level is back down around this consolidation and double bottom or slightly higher low, depending on how you look at it, down around 182.37. So kind of back into this kind of mid-range. See what happens from here. Could be interesting. If you get a higher low setup here, that could be interesting as well. And then looking at Tesla, gave back all of the gains from yesterday. It was a pretty strong day, about 4.5%, gapped higher and then fell throughout the session. And then you can see it's down even more after hours. I was reading some news about Elon Musk being denied his compensation in the courts, which was interesting. And on that news, Tesla fell. which was also concerning. So apparently Tesla likes it when Elon is in a little bit more control of Tesla, even if he's given a massive compensation package of about $50 billion, which does seem a little bit extensive. And with that news, we are rolling back over off of that 21 EMA on the 4-hour chart, back into this previous support, down around 182. And then my next level is 177.70. Moving over to Microsoft and Google, you can see Microsoft did give up a little bit of ground, but it has really bounced from that 55 EMA down at 396.60 back up to 404.80. So it made back a little bit of that ground. I'll probably do a video later on Microsoft earnings, take a closer look at these charts. But right now it's holding up pretty well as I'm recording this video. It did break the 9 and 21 EMAs. It did test that first trend support. So it did break down a little bit. You can see RSI breaking down, momentum slightly bearish there. So not great. The bigger story here is Google. Google had a massive run into earnings and they could not keep it up. So on that candle, it's down about 5.5%. Took out the trend, took out my first support, tested the next one here at 143.82. It's holding that level. Momentum bearish, RSI oversold already. I would expect this to continue lower on that momentum, and it's not a great start to the earnings season. Moving over to AMD and NVIDIA. AMD also reported earnings, fell into the close and then down even more, 6.2%. Momentum bearish, RSI bearish. Next level of support, 157.50. And then you get all the way down to 149.33 for dynamic support. Could be right in line with this trend as well. Let's go ahead and extend that out. Right in that same region, you can see there's a confluence of support in that same area, 151.17. Certainly possible we find some support there, but right now, this looks bearish. It's starting to break in terms of structure. Maybe it finds a bounce, set up a lower high, and then moves even lower. Certainly possible. And then looking at NVIDIA, a bit of a sympathy play here. They didn't report earnings, but they're down 2.25% after hours on that first candle. It's basically flat into the day, and then after hours, like I mentioned, moving much lower. Moving over to staples and discretionaries. Staples continues this massive run. Got the breakout here, broke the trend, continues higher. Staples looking for that $74 price target, continues to be in line with that move. And then looking at discretionaries, breaking down here. Tested that level, 174.76, broke down from that level, broke down to the 200 SMA at 172.66. Obviously moving lower with the Tesla news, so that doesn't help either. If this area breaks, 170.68 is your next level, but at this point I would expect that area to break and then potentially look for 166.78. Moving over to oil and gas and energy. Oil and gas continues to break. Got above this level here, 135. Got to the 200 SMA, momentum bullish, RSI overbought here. Let's look at it on the daily chart. You can see we had that pretty massive day. Gapped lower, rallied through, took out that level, got above the 200 SMA on the daily chart as well at 136.25. Next level is the 144 EMA up at 140.90. So oil and gas having a bit of a run. And then looking at energy, let's look at it on the daily chart. Similarly, having a bit of a run here. Big gap down. Big rally. Let's go ahead and extend out that trend line. It's right in that same zone. Continues to hold that level. And then going back to the 4-hour chart, you can see it is down a little bit after hours at that key level, 48.56. I was watching it. Couldn't really keep up the momentum on the break, so I didn't take that position. If it gives me an opportunity tomorrow, I'll be watching it pretty closely. I do like energy here. It is at my level. Pretty tight stop here at 84.56. It's been a bit of a run into it already, but next level for me would be 87.37. Moving over to breadth, not much of a move here today. Remember, it doesn't factor in after hours price action. So before the close, markets were fine. After hours, they're less fine. So just keep that in mind. I expect this to be lower tomorrow. It did show a little bit of weakness, but momentum still bullish. RSI momentum on the 50-day also technically bullish, even though it's a hanging man candle there. At this point, I would expect both of these to go lower tomorrow. Moving over to yields here just for a moment. 2-year held basically flat in the same range. 10-year, on the other hand, broke down pretty significantly. Took out the 21, took out my trend. Momentum breaking down. RSI moving lower. So we'll see what happens here. If it moves back down below that 4 range, that could be interesting. Does seem to be losing strength. We've had a couple days in a row of bearishness coming off of that 55 EMA. So interesting. I'll continue to watch this one. Obviously, I think we're going to revert. Obviously, I think we're going to move back into normal conditions pretty soon, but this is a bit of a break, and you do have to acknowledge that. Moving over to the dollar, did nothing at all. You can see another doji, 0.04% to the downside. This is just waiting for the FOMC tomorrow. Once we get that news and the unemployment data, then we'll have more clear direction on the dollar. It's just standing by for news at this point. Moving over to bonds, TLT fell on the day, 0.16. So we had an update yesterday, gave all of it back here today, and then we're basically flat on the week. Momentum slightly bearish, really not much momentum there at all. At this point, again, waiting for the news tomorrow. TLT, on the other hand, obviously breaking higher with that move that we saw on the 10-year. Pretty decent gap up. We are right at that 21 EMA and right at resistance. It's up even more a little bit after hours at that trend line. So critical point going into the FOMC tomorrow. If they come in dovish, we could see TLT bounce right back into this previous range up around $100. Certainly possible. But if they come in a little bit more hawkish, we could see it hold in this area and break down even further back into these previous levels. Critical point looks like a breakdown, retest, continuation lower in my opinion. But like I said, it's going to be driven by the Fed. Moving over to the MOVE index and the VIX. MOVE index falling a little bit here as bonds gain. And then looking at the VIX, it did fall after that peak, which was slightly lower here than the previous one. It's still holding at a higher low at the 21 and 55 EMA, still holding in this area. So it's certainly possible it bounces from here. We don't get the exact same pattern that we've been having over the last 3 peaks. So peak, all slightly higher than the previous one. This one is slightly lower, really in that same range here. The question is, does it hold here and then spike up, or do we get a move back down and markets start to go a little bit higher? I just don't think that they can do it with the weak earnings and the potentially more hawkish FOMC. Moving over to my accounts, it says I was down a lot, but that's not really true. When we get these larger moves after hours, it does take my losses out of my share positions, and then it doesn't allow the call positions to balance out that move lower because call prices don't change after hours, at least on this platform. So you can see looking at the Qs, it's down to 422, closed around 425. So that would be $3 a share times 400 shares. That's about $1,200 lower. So it's already pricing that into the stock price. But like I said, it doesn't allow this share price to adjust, something that I've learned here on the Tasty platform. So we'll see that balance out a little bit tomorrow. But in terms of positions, I have not adjusted anything. IWM at 191 call continues to protect me from this downside. IWM is up a little bit after hours. My max profit there up around 201, so plenty of room to allow that to rally over the next few weeks. And then looking at the Qs, still down around 404 and 409. If these share prices start to get below those covered calls, I'll take off the shares and hold the calls to collect the rest of that credit. That's how I'm playing it right now. I do think we'll see markets move lower like I mentioned, but I still have plenty of protection on these covered calls. And then looking at my TQQQ, I have a 54 call for $2. Again, similarly on the TQQQ, you can see $54.65. It's already factoring in that loss, but it's not allowing this call position to adjust. My break even to the downside should be down around 51.20. So it does have quite a bit of downside potential until I actually start to lose money on this position. So I'll continue to hold that call and trade it a similar way to the NASDAQ. And moving over to that NASDAQ position, just to give you a better perspective, you can see my break even is all the way down here at 370. So I have to get below 370 at expiration to actually lose money on this position. Otherwise, these covered calls are going to protect me all the way down to that position. I bought the stock down here at around 398 and it's trading up around 422. And I had these covered calls up in that area, giving me a max profit closer to that 435 range. So stock price could rally about another 10 points. I will mention that if it starts to fall a little bit more over the next few days, I might roll them down and in to give myself a little bit more protection, a little bit more credit. I was thinking about doing it today, but tomorrow I think is going to make more sense once we get a little bit more information from the FOMC. So we'll see how that plays out. But right now I still have quite a bit of protection on these share positions. Let me know down in the comment section what you think of Google earnings or any of the other earnings that we saw. Can markets hold up at these prices as earnings start to come in a little bit weaker than expected? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.